The next indicator we'll discuss is the Fear and Greed Index. The Fear and Greed Index measures if a market is fairly priced based on metrics that could be said to measure emotional influence on a market. It scales from 0 to 100, where high levels of fear indicates a fall in prices, where the asset falls below its fundamental value, and high levels of greed indicate an increase in prices, where an asset rises above its fundamental value. The fundamental value being what the asset is worth. Here's what the Fear and Greed Index looks like. This can be found on alternative.me, but there's different variations. It's used in traditional markets. This one in particular is used to measure the fear and greed, the emotional sentiment, the market sentiment of cryptocurrency as a whole, particularly focusing on Bitcoin. As of January 2022, we see that we are currently in extreme fear being on the left side of this range, ranging from 0 all the way to 100. We're currently in the extreme fear levels with a rating of about 24. Now, while different fear and greed index indicators may be based on differing metrics, many will factor in price momentum, how fast price is changing, trading volume, price strength, how strong the current overall greater trend of the asset or of the overall market is, the amount of leverage used at a given moment in a market volatility, the social volume of a particular asset, the asset's market dominance, and overall trends and analytics. When a market is in a bull trend, rising prices can cause people to feel that they are missing out on possible monetary gains. As a result, they buy, or FOMO, fear of missing out, in a chance to ride the upward momentum, which further reinforces the trend. More people are buying in because they don't want to miss out on the potential valuation gains, and it just further propels that trend to the upside. In reverse, when a market is in a bear trend, falling prices may cause people to fear losing money, causing them to sell and further driving the prices downward. If people see prices falling, they think that the prices could go even lower. They sell, and it essentially further capitulates the price. It's a self-fulfilling prophecy where the price goes down lower because people are selling, and people are selling out of fear that the price is going lower. And this is how this plays out over a general market cycle, where at the beginning of a cycle, we're at maybe some sort of bottom where there's hope that a recovery is possible, and disbelief that the rally that really rallies the price to new highs is false. People think that it will fail, and then overall, as time goes on, optimism, greater belief, the thrill as the market is reaching higher and higher, and a sense of euphoria at the top where everyone thinks that they're geniuses, everyone thinks that they're going to get rich. And at this point, you'll see a lot more extended leverage, people buying more on margins, borrowing money to essentially, taking out loans essentially to buy more of that asset. And then as the market cools off, as it always does, there's a sense of complacency, eventually resulting in anxiety, denial, panic, and overall market capitulation, where people are selling as the price goes down and essentially fueling further sell-offs, fueling further downtrends in the price. And these are all just various emotions that go along with a market cycle. And essentially, the fear and greed index is a measurement, or one of the best measurements, of this emotional impact in a market. So while these readings may represent overall market sentiment and emotion, they may provide valuable financial outlooks as to when to sell or buy an asset. Overbought or overpriced assets may be matched with a high greed index reading, implying that investors have gotten greedy over time and that the asset is overvalued. It's valued higher than what it fundamentally should be valued, or what the market deems it to be valuable. Now, this could be seen as a sign to take profits before a correction. Oversold or underpriced assets may be matched with a high fearful indication, or an extreme fear indication, implying that investors have fled away from the asset as they sold their holdings. The severe drops in moments of red earnings may indicate a buying opportunity if an investor is looking to profit from a recovery. So let's see how this would play out in real time. So here is a chart, essentially a plotted chart of the crypto fear and greed index over time. This is a plot of the fear and greed index over time, where a value of 0 means extreme fear, while a value of 100 means extreme greed. And this is based on a year's worth of time from November 5th, 2020, all the way to November 5th, 2021. On the left side, on our y-axis, we see our values. So at extreme levels of greed would be higher, near 100, whereas extreme levels of fear would be lower, towards the 0 line. And the x-axis is just various dates. So as we see here, into late 2020, going into early 2021, Q1 2021, overall crypto fear and greed index was at elevated levels. Essentially, it's for the most part remaining around 90, high 80s to 90, and then a resulting drop mid-January. And next we'll take a look at how that looks and is represented on a technical chart. There's a drop all the way to a 40 fear and greed index. So the indicator has shifted from a greedy market environment to a fearful one, and this was reversed going into mid-February, and then finally we see another reversal to the downside into March. The market would eventually return to greedful market indications, and this essentially will go up and down as the market goes up and down, and is based on the various metrics spoken about before to inform that measurement. Now here is what the fear and greed index would look like on a chart. So in late January, maybe early February, when the fear and greed index fell to 40, we saw a fall from about $40,000, $42,000 per Bitcoin in early January, which coincides with this overall greed market environment. This at this point, Bitcoin has never reached these price levels. In late 2020, we saw it blow past the $19,000 valuation that was the all-time high previously established in 2017, and overall reached new highs. This was all considered uncharted territory at this time. So generally, this market movement was considered very greedy and very bullish. We reached a high of about 42,000, and then the market reversed. There was essentially a cool off, a pullback. And as a result, the fear and greed index fell to about 40. The market sentiment shifted to a more fearful environment. Going forward, the market did continue onward to the upside after a short period of consolidation, and would reach new highs into late February, early March, where the fear and greed index rose to 95. Now, each time, as we see, there's various moments where there's peaks or near peaks or overall extended movements to the upside, or really even to the downside, where the fear and greed index will show dramatic changes. We see this dramatic shift to the upside where not only did the price increase from about 27,000 per Bitcoin all the way to about 57,000 per Bitcoin, more a little bit, about double, give or take, in valuation. We see a dramatic shift from the fear and greed index from 40 all the way to 95. And then likewise, it falling back down, it rising to 74, it falls to 54, and it came back to 79. Now, what's interesting about this is taking a look at when the readings would show these extreme levels of fear and greed, particularly in June and July, this overall bear market, this downtrend that was observed in the summer of 2021. We see the fear and greed index fell to 19 at this particular point, 10 at this particular level, which was the lowest point of the overall downtrend observed over the summer of 2021, about $28,000 per Bitcoin. If you were to have purchased or invested in Bitcoin at this particular level, going forward as the market reversed back to the upside, significant profits could have been made by following this strategy. Same thing with the fear and greed index. In terms of it rising to the top. Here we see in October, the fear and greed index rose to a new high of 84, just as Bitcoin reached a new high of about 68,000, 69,000, depending on the exchange. Now, there are valid criticisms of the fear and greed index. It does not work all the time as a simple buy and sell indication, and it's important to keep note of that. One of the valid criticisms of the fear and greed index is that it encourages trading in and out of assets in an attempt to time the market. For most people, there would be greater gains from having most of their holdings held within the market as long-term holds, especially for inexperienced traders, people that are new to trading. It's good to experiment with trading with smaller funds. That way you get a better feel on how to not only trade, but also read the market environment, and what could happen and what could indicate upward or downward movement. Now, inexperienced traders may see these indications of fear and greed and attempt to time the market by selling at high levels of greed and buying at high levels of fear without factoring in other metrics. Now, the financial group Fidelity tracked an investment in the S&P 500 index over a 40-year period from 1980 to 2020, where missing the 10 best days would have cut more than half of the potential financial gain from the investment. For those who are unaware, the S&P 500 index, it stands for the Standard & Poor Index. It is a reading of some of the leading companies on the U.S. stock markets and U.S. companies in the world. Leading companies in financial assets or across a variety of sectors across the world. And many investors will often look at the S&P 500 index as a reflection of what the overall market is doing. So here's Fidelity's study. They make a greater focus on time in the market, not trying to time the market all the time. They say that it can be tempting to try to sell out of stocks to avoid downturns, but it's hard to time it right. If you sell and are still on the sidelines during a recovery, it can be difficult to catch up. Missing even a few of the best days in the market can significantly undermine your performance. Now, here is a measurement, essentially a study of hypothetical growth of $10,000 invested in the S&P 500 index from January 1980 to August 31st, 2020. So this is a 40-year period. So if money was invested on January 1st, 1980, that $10,000, if it was untouched for 40 years, that $10,000 would have increased to about $950,000. It's a significant profit increase. Now, missing the 5 best days, the top 5 best valuation increases, would have seen a 38% decrease from this figure to $590,000. Still a significant increase from $10,000 invested in 1980. Now, missing the best 10 days would further bring that valuation down. And overall, we see this continue as missing the top performing days, the top days with the most market movement towards the upside. We start to see continuous decreases in losses in potential profit over that 40-year period. Now, cycling back to our figure, our example of the Bitcoin Fear and Greed Index, if you were to have sold at particular moments, let's say when the Fear and Greed Index were to have risen to 95, if you were to have sold here, which would give you a valuation of about $50,000 per Bitcoin, overall, it would have been a good sell, considering that the price of Bitcoin fell in May to about 30,000, give or take, and would continue to fall throughout the summer of 2021. But you would have missed out on all these potential gains seen here, because there were multiple instances of Bitcoin surpassing even the highest point observed in late February, which was about 57. We saw 1, 2, 3 more waves, impulse waves, essentially, where Bitcoin would make these movements to the upside before eventually retracing back to lows. So while this could have been a useful indication, here we would have missed out on this. Overall, it would have worked out, though, if you were to have rebought in when the Fear and Greed Index fell to extreme lows of 10. Now, here in early October, we see the Fear and Greed Index rose to extreme highs, 84. Now, this could have been interpreted as a top signal, considering that in the current time, at the time of recording in January 2022, Bitcoin has fallen to about 42,000. So we saw a high of about 69,000 reached in October, mainly due to momentum garnered from the Bitcoin ETF release on the New York Stock Exchange, resulting particularly late November into December, Bitcoin would fall to about 42,000. So using this could have been used as an indication to sell. Once again, though, hindsight is always everything, and at the time it's not always very clear as to what could happen, but this is a potential use in addition to other indications as to what the market could do in terms of where it's at in a market cycle.